Ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host. We have so much going on right now in the world, with Russia and Ukraine, and is there going to be an invasion? Has they already invaded? Who's going to do what? The market is reacting. Everybody's becoming nervous. We're seeing oil starting to take a run up, right? So it's a lot of things going to market right now, leaving a lot of investors saying, hey, what should I do? What could I do? Or whatever the case may be. So, ladies and gentlemen, let's talk about it. Markets, how the markets are reacting. Stocks are down 400 points today from the S&P 500. And also, oil is taking a run up with high inflation. So if you haven't done so already, ladies and gentlemen, boys and girls, y'all know what time to do. Go ahead and make sure.
Hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned to the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Of course, this is going to be one of the most boring episodes because all we're going to do is talk about investing, what's going on in the world, how am I looking at the current economy and the market and things like that, and all of the good stuff like that. But if you are catching this live, you know what you need to do. You need to go ahead and hit that comment button and let me know where you're from, where you're catching this in from. Join the conversation. Let's have some fun. So already, let's see what y'all say in the comments. Always holding me down. Al, what's going on, Al? Glad to see you tonight. Always holding me down. Dakota Johnson says like and turned notifications on. Appreciate that, Dakota Johnson. Where you calling in from, or where you commenting or checking this in live from? Appreciate it. Ladies and gentlemen, I've been gone for a little while. You know, I haven't been on here in particular coming in at night. A lot of things going on in life. Sometimes in life, I have to sit back in clear headspace. For all of us men out there, we already know you have the clear headspace as you're going through things in life, right? And what I mean by that is, you know, you have things going on. You know, I'm a regular person. You know, active duty Navy. I'm a husband. I'm a dad. You know, I'm a brother, nephew, friend, cousin, things like that. Entrepreneur, businessman. You know, all the type of stuff like that. So sometimes in life, things get crowded. Things get crowded, and things become so crowded to where you can't even move. It paralyzes you. I don't know if y'all ever been through that, but sometimes I do have those moments in life that, for me, what I do is just take the time off, relax, get my head together before I come back out. So, I mean, I've been doing this now. I think how they said nowadays, I think this is year number 8 or 9. It's 2013 to 7. Yeah, this is coming up on the summer number 9. This summer will be 9 summers I've been doing this. So, you know, definitely appreciate everybody that has supported me across the globe, who supported all the work I've done and all the books and live and everything. I definitely appreciate it. So if you're coming in, I always let to give y'all shout outs if y'all coming in. Tell me when you're catching in this show in live tonight, or if you're even catching the playback, feel free to drop a comment. But tonight, ladies and gentlemen, we got a lot going on. Let me see what else y'all say in the comments here. Robert Carr, let's say Robert Carr says, traders, hopefully you're not involved with Ameritrade, Charles Schwab. You wouldn't believe what they just done to my account. It's like they started a different business model, screwing customers. Robert Carr, what did they do? What did they do? What did TD Ameritrade do? You know, I will say this: SWPPX, as you guys and girls know, that's the index fund for the S&P 500, and I compared that against the SPY. I compared that against the SVOO, which is the Vanguard S&P 500 ETF, and the SPY, which is a Standard and Poor ETF as well. I compare those against index funds, something like a SWPPX. They all do the same thing, but it's small things that they do a little bit better. And the best one that I personally like was SWPPX, which is a Charles Schwab index fund, which is on E-Trade. It is free. On a lot of platforms, it is free. I went in. I also use. I mean, I've used many platforms, but I went in to go use TD Ameritrade. I went in and purchased SWPPX, and it charged me $50. Right. So I don't know if they since have changed that because Charles Schwab has purchased TD Ameritrade, but that was like, whoa, what's up? What's up with that, man? It's a free index. How did I get charged $50? So Robert Carr, tell me what happened over there at TD Ameritrade. All right. Charles Schwab and TD Ameritrade, they are the same because Charles Schwab purchased TD Ameritrade like a year or two ago, right before the pandemic. Charles Schwab drove. Let me say here's a business tidbit here that Charles Schwab did. Charles Schwab drove down the price of TD Ameritrade. How did Charles Schwab drive down the price of TD Ameritrade and then turn around and buy TD Ameritrade? Now, of course, I wasn't behind the scenes and saw all of the deals, but I'm going to tell you what was put out in press releases and things and the way things look to play out. The first thing happened was before fees started to drop on transactions. When you bought and sold stocks, the fees started to drop. Charles Schwab, if my memory serves me correctly, they wasn't the first, but they was the first major broker house that did zero fees commissions. So I think before them was probably somebody like M1 or something like that or whatever. But Charles Schwab was the first big broker house that said, hey guys, we're going to zero fees. Right. And then when they went to zero fees, next thing you know, guess what E-Trade said? You know what? We're going to zero fees. That was the second big broker house. Then TD Ameritrade jumped behind and said, guess what? We're going to go to zero fees. And when they went to zero fees, because everybody had changed their business model to what's this called? Order flow. Everybody went to the order flow business model. What happened was it drove down the price and it drove down the value of TD Ameritrade because they wasn't getting those big commissions. So when it drove down the value, Charles Schwab came in and got it for a better price. Kudos to Charles Schwab. Shout out to Charles Schwab. So nice little business move there. They knew they wanted the company, knew they wanted to buy the company. Like I always say, you want to buy a good company for a wonderful price. Not you want to buy a wonderful company for a good price. You want to buy a wonderful company for a good price, not a good company for a wonderful price, right? So, yeah. Next up there, Martin Sims. What's going on, Martin Sims? How you doing? He said, like this, bro. Appreciate it. Thank you, man. Thank you. Appreciate it. And I like what you're doing. If I think I'm remembering you correctly, Martin, I don't want to make sure I got the wrong Martin Sims. So, Martin Sims, appreciate that. You know, tell me where you're calling in from checking this in live. So, ladies and gentlemen, let's get to it. Let's get down to the show. All right. Y'all keep on coming in and catching it live, and we will keep on talking about it. All right. So the first thing is, let me see how long what we got here. Okay, my bad. I missed you there, Dakota Jones. He said, oh yeah, joining in from Southwest Virginia in the building tonight. Dakota Johnson said he's from Southwest Virginia. Thank you for tuning in. You know, there we go. Martin Sims. That's what I want. Martin Sims. He said he said, thanks. He's a realtor out of Fort Bragg, Raleigh, Fort Bragg area. Shout out to Martin Sims for doing his thing out there, putting out his quality videos, pushing himself. He's from the hometown down there in Georgia. I don't know if he moved there, but I just remember seeing you around there. So I want to give a big shout out to you. Before I said that, I thought that's who it was, but I didn't want to say the wrong thing and say, hey, yeah, are you the guy? They'd be like, no, I'm not a guy. I'm a girl from XYZ. So anyway, ladies and gentlemen, but appreciate it. Keep doing your thing, man. Definitely proud of you. Give a shout out to Martin Sims. What's going on, man? So, ladies and gentlemen, the first thing we're going to talk about today is right now we got the tension going on. S&P 500 stocks have dropped so far this year. Stocks are down 10%. Stocks are down 10%. And let me put this up here. Let me write this in here as well, so people that's catching the playback there know what part I'm at. You know, I can't be here too long tonight. Stocks are down. Stocks are down. But guess what? What is up, guys and girls? Oil. Besides inflation. I'm funny guy. All right. So we got stocks that are down. Oil is up, right? You know, oil is up. Stocks are down. Oil is up. So far this year, the S&P 500, if you are tracking the S&P 500, you will see right now, so far this year, stocks have fell. S&P 500, which is the Standard and Poor 500, top 500 companies in America, from January 1st all the way to now, which is February 22nd, they are down 10%. 10%, right? When you see stocks down 10%, this is called a correction, right? 10%, you get the correction. About 20%, that's when you go into the recession. I'm gonna tell y'all something here too that y'all may like to hear as I was doing research, but I don't want to spill it because I got a show to do in Hawaii on Thursday. So I'm going to put that on this show in Hawaii on Thursday, kind of sort of, but y'all may hear it twice. Who cares? So anyway, right, ladies and gentlemen, stocks are down 10% this year. Oil is up. Now, if you remember me talking about this, if you, some people come to me, they say, hey, Prince, man, 5 years ago, you said this company XYZ and you didn't like this, but you switched over the time. I switch every day as I learn. I'm an evolving person. I'm an evolving investor. So I will be a fool if I think the same way I think 3 years from now, 5 years from now. That means that I haven't grown, right? So as I grow and learn things, I am not an oil fan at all. Never was an oil fan. Anybody that knows me and tunes into the show, I'm a green energy guy. You know, I looked at solar panels. I looked at the green energy deal that President Biden talked about when he was running in the campaign, how oil was kind of phasing out. We got into electrical vehicles. We got into solar panels. We got into XYZ. And I say, hey, why would I invest in the oil? Nobody seems to be betting in the future of oil. The demand for oil is slowly decreasing. Everybody's trying to do less and less with oil. If y'all catching it, y'all hit the thumbs up button, share this around. So the thing about it is, when I looked at it, I never was a fan of oil. So last year, y'all know James Fortland, Uncle James, he came onto the show. Great friend of mine I met years ago on Wall Street. He's from the 70s. You know, I mean, he was in the professional industry in the 70s. I was born in the mid 80s, right? So it's way before my time. So to think about it, in his generation of investing, he saw high inflation. Inflation is at its highest point that it's been in 40 years. That was like in the early 80s, way before I was born. So I sat back and I said, with this whole market going down, you were seeing, I mean, you know, real estate is not going down, right? Real estate is kind of in its own world. But if you're anything that's on the market, the real estate, the synthetic real estate, things like REITs, real estate investment trusts, they're connected to the stock market. Things like your real estate investment trusts connect to the stock market, your land ETFs, anything like that, they're connected to the stock market. So for prime example, how you know it's synthetic. Remember in 2020, when the pandemic happened, you saw real estate go up. It held its value and real estate actually went up. But if you was a REIT investor, which is a real estate investment trust, or you held a land ETF, anything like that, everything dipped. So it's kind of synthetic. Even though they go off of the market, they still roll with the market. So as I looked at all of the industries across the industries, all the majority of the industries are down, right? So what does an investor do when you see in all of the industries that are down? But on the reverse end, I saw that, well, I remember this old saying, there's a bull market somewhere, everywhere. Now, before I go into that, last year, James came on. He said, hey, Prince, I'm bullish on oil. I said, why? He said, Prince, you know, we got high inflation. We got XYZ. I said, yeah, I can see that. But oil going into the long term, I don't know about oil. He said, Prince, you know what? I bet you. You take Bitcoin. I mean, this is at the time back in January, February of last year when Bitcoin is just on a roll. Bitcoin is up about 100%, right? And he said, you know what, Prince? I bet you Bitcoin, I bet you oil will outperform Bitcoin in 2021. I was like, still crazy. This man said old oil is going to outperform the highest asset class, quote unquote, that we have right now. But when you go to back and look at it, you look at Bitcoin January 1st of 2021 all the way to December 31st, 2021, and look at the price of oil. Oil beat cryptocurrencies last year. Well, not cryptocurrency, it beat Bitcoin on a January to December 31st basis. So then that kind of made me scratch my head. I said, okay, what's going on with this oil thing? So then I thought about it. I said, man, you got high inflation. You got tensions going on overseas. You got Russia and Ukraine. Okay. I'm looking at the market. Everything is down. There's a bull somewhere. Where's this bull? Ladies and gentlemen, let's take a look. Oil. If you go to the ETF, USO, that's just one. You can look at the crude oil price barrel per oil right now is $96, I think. It's up 10%. USO is up 10%. I'm sorry, ladies and gentlemen, I misquoted. USO ETF, the oil ETF, is up 19%. Stock market is down 10%. S&P 500 so far this year in 2022, you're seeing go down 10%. Oil is going up. So when I did my research, I started to look at things. I looked at the world. And I said, you know what? I'm going to bet on oil. With all of my stock purchasing, if you're a 401k person, what am I doing personally with my 401k? What I'm going to do is I'm going to up my contributions. Right now, there's a lot of fear in the market. They say buy when there's blood in the street. When people get fearful, when we have things like war, any type of war, any type of country invading another one, any type of conflict like this, we always see the investors bite their nails and people start to sell. You've seen tech. Why is tech down so bad? Tech is down so bad for two reasons, ladies and gentlemen. I'm going to go ahead and say this on this show because who cares? If I say it 2 times, who cares? I believe, okay, we're seeing ourselves in high inflation. We got a couple things going on right now. We're in high inflation. We got tension overseas. Everybody knows with high inflation, it's not the inflation that kills you, it's what the federal government does to combat inflation. So there's no secret. It doesn't take Einstein to know the Federal Reserve already said we're going to peel back our asset purchases. Everybody know everything like technology stock, growth stocks, they have a high volatility, a high standard deviation. They deviate a lot. Even though they grow the most over time, they deviate a lot, aka volatility. So people who made a lot of money, 2020, I looked like a genius when I said something like, oh yeah, Apple and Microsoft and all these technology companies did great in 2020 as we kind of spun out of COVID, right? Then we came back to 2021. Tech did okay, not too bad. But this year, when we've seen inflation jump up to 7.5%, everybody knows interest rates are coming. A cool down market is coming. And guess who's going to get hit the hardest? Tech companies. Everybody starts to sell off, rotate out of tech, rotate out of tech, rotate out of tech. As people cool off on technology stocks, some people are jumping into consumer staples. Your consumer staples are things that are going to sell regardless. Doesn't matter what's going on in the economy, people will smoke cigarettes. Doesn't matter what's going on in the economy, people will drink alcohol. No matter what's going on in the economy, people will buy toothbrush, toothpaste, I hope so, body wash, soap, whatever, right? Razors, those are consumer staples. They only really see a bump when we see inflation go on, right? They're staples. They don't really move too much. There's no economical time where people are like, oh, we really need to buy some more soap, unless it's toilet paper during the beginning of the pandemic, right? But anyway, there's no time in the economy where people are like, let's rush and get all the toothpaste. Toothpaste is kind of simple for the most part. But you're going to see in times of inflation, people, they have purchasing power to where pricing power to where you can see the consumer staples start to go up. So the thing is, when I looked at this, everybody knows the Federal Reserve is going to raise interest rates to combat inflation. And ladies and gentlemen, as I look at this, I look at when was the last time we had double digit inflation? What did the federal government do? How did they get themselves corrected out of the inflation? And the sad part is, the only way they got out of that inflation was through a recession in the early 80s. Now, let me see what y'all say in these comments. Let's see what y'all say in the comments here. Martin Sims says, thank you, man. Thank you. Keep doing your thing out there in North Carolina, man. Keep doing your thing. All right. So the Opinion Sports Show says an investor should go to gold if you see the markets down or energy. Very, very true. So what happens is something that we put on the very beginning of the show. Anytime the markets get scared, become scared, high inflation, the late 70s and going into the 80s, they had two things going on. They had high inflation and high unemployment. So they tried to put in something called the Stop Go program, right? So their whole idea, I get into that on I don't know, I keep saying, hey, I'm gonna get on the next show, but they try to implement the Stop Go program where they're like, hey, we're going to raise interest rates so high to combat inflation. It's crazy that interest rates were like 20% back then. So they raised interest rates so high that it finally started to curtail inflation. Then they hit the stop button, then they hit the go button. Then unemployment started to come down as well. So they raised the inflation rates to cut inflation. Once the inflation stopped and started coming down, then they started cutting the interest rates, and then unemployment went up. That's the stop go. So now the whole thing about it is, yes, people at that time, people went to oil and people went to physical assets like gold. This is no secret. Anytime in a down economy, you see things like gold and you see things like gold, silver, commodities, and bonds. Some people run the bonds, but the interest rate's about to be played with, so a lot of people are not doing that. So you're seeing people run to gold, and some people are running to oil, right? And so I will agree with that. The opinion sports show. The opinion sports show says this is OKC Boy, the insurance agent, guy who likes the IULs. Okay, what's going on, man? I didn't know you had a sports show. What's going on, OKC Boy? All right, the opinion show. What's going on, my man? What is going on? All right, IUL. That is the Index Universal Life. One day I'm gonna have to call you up, man, and let you tell everybody about the IUL, the Index Universal Life policies, and all of the good stuff like that too. Man, glad to see you on here on live. It's my guy, Banky Pound, teaching Prince, and me too. Salute Banky Pound. Banky Pound, that's my guy right there, Banky Pound. Y'all go check out Banky Pound. Banky Pound, you will definitely got to have you on the show. We're going to make that happen. I know I keep saying, hey, I'm going to make this happen, but I'm going to get the schedule clear and make sure we make that happen. 33 years in prison. How do you start investing after 33 years after being in prison? Where do you start? Clear out. You go into prison at 20 years old. You come out at 53 years old. Where do you start investing, or even your whole financial life? But we're going to do that. We're going to do that episode. We're going to sit down and make that happen, Bank. Glad to see you here. The opinion, he says XLE is a good oil and energy ETF too. Yes, that's true. Energy. Now, the reason why I looked into energy, one thing I didn't like about it, the opinion sports show, when I looked into XLE, what caught my eye with XLE, because when you look at the consumer price index, that's the inflationary report. Energy has the highest inflation. I want to say in January alone, energy was at about 9.5%. It was a crazy percentage. So I immediately went to XLE and I said, well, let me see how XLE has performed throughout the year. So let's take a look. Let's see how XLE has performed out the year. XLE, right? ETF. We're going to type in XL ETF, right? And Here they are. I'm gonna share it with you guys. They're up 17%. Let's take a look at that. So right here, ladies and gentlemen, XLE year to date is up 17%. It's $66.95. No problem in there. I like that. I like that. I'll take 17% so far this year from January to now. XLE, the energy index. Now let's take a look at USO, right? Now, if y'all remember Uncle James, he always came on here and talked about BPT. That was his thing. He was like BTP, and he's been harping on this thing since it was like $4. So let's look at the oil ETF. There you go. It's at 19.53%, right? Not too bad. That's a good one too. XLE is an ETF. It's an energy ETF, right? And you're also seeing oil having a nice run too at 19%. BPT. Let's take a look at BPT. And so far this year, BPT 136%. 136% for BPT oil, right? It's the BP oil trust in the United States out of New York City. So that's a nice one too. But anyway, you're seeing oil and energy are the ones that's having the big returns in the market right now. I'm making sure y'all can see this. There we go. So that's a good one too. So that's not a bad one. That's a pretty good one. Like I always say, in the world of investing, right? You're going to have good, better, and best. So for prime example, in OKC boy, we always talk about, or you always talk about IULs. You're like, Prince, IULs. Nothing's wrong with IULs. The thing is, for prime example, I tell people right now, if you are somebody who has a 9-to-5 job and you're saying, hey, I don't know what to invest in and things like that, a simple thing you can do right now, as you see this tension go on overseas, you're going to see the market become jittery and start to fall. As you see the market start to fall and get jittery, this is the time, if you're at your job and you are putting 9% of your pay into your 401k, bump it up to 10%. But before you bump it up to that 10%, look inside of your 401k and see where your 10% is going. My first 7 years in the military, I was putting my money into the G fund, which was a government bonds. I was invested into government bonds, which is crazy for an 18, 19, 20-year-old young man. This bonds are for when you get a little bit older and you're looking to conserve capital, depending on what type of bonds you're looking at. But in general, people who invest in the bonds are people who are trying to preserve. Hey, I made a lot of money. I want to preserve it. And I want to get a little cash off of it. That's the way it may be. Right? Now, here's the next thing. So you go to your 401k, make sure you know what it's invested in. If you're invested into something like, a S&P 500 index or something like that or whatever, or maybe that's the one you probably want to go to, bump up your thing by 1%. 1%, I guarantee you, most people won't miss 1% of their pay, but it will pay you off in the future. So in times like this, ladies and gentlemen, I'm going to call it right now. I think we're headed towards a recession, not a depression or anything like that, but I think we're going to be forced into a recession. Why? I think that the Federal Reserve is going to keep raising interest rates. They're going to start raising interest rates unless Jerome Powell got a magic wand or something. He's going to raise interest rates to cool off the market, and he's going to continue to raise interest rates like I seen them do. I studied and saw them do this in the 70s and the 80s, in the late 70s, in the early 80s, when inflation was up there around like 13, 14%. So they kept raising interest rates. They raised interest rates all the way to 20% to stop inflation. But yes, they finally stopped the inflation, but then they went into a recession. A recession is 2 quarters of a declining GDP, right? Or a 20% fall in stocks. I think that the Federal Reserve is going to have to do something about this inflation, and their reaction to inflation, I think, is going to be a self-induced recession that we're probably going to go into. That's my opinion. History repeat itself. The only way you're going to know history is if you go back and study. I wasn't born then, but I had to go back and read it and look at today and look at now. unless today now I will say today the Federal Reserve acts a whole lot faster than they did back in the 70s and 80s. In the 70s and 80s, it took, I don't know, they waited and looked around and waited. Then they tried the tapering that we see today. But now the Federal Reserve, now they are more likely to go ahead and hit that button. All right. But I think we're going to be into a self-induced um recession. But nothing to really cry about. Recession doesn't last for about a year. That's how long it lasted. You know, they had to do what they had to do. And I think that's probably what is going to have to be done to get out of this, to slow down this train. Max B, that's my guy. Y'all give a shout out to Max B, man. Max B been holding me down, man. Let me tell you how cool Max B did something. Max B went and got my whole entire book series, and he got him into a library out in, I think, Washington State, where he's at. If I'm not mistaken, Max B, correct me. He went out there and got my whole book series, my children's financial literacy book series. Wesley Learns to Invest, Wesley Learns About Credit, and Wesley Learns About Insurance, Credit, Insurance, and Investing. That's for kids. And got him inside of a library out there in Washington. Big shout out to him. He went in and put in a request to have my book series added to this library. The library decided to pick it up, and the library carried my whole series. They got the paperback copies out there. So Max B, man, forever indebted. I definitely appreciate that, man. Definitely appreciate that. That's real support. That's real support. So now let me see what you got to say here. Max B says, seeing these gas prices, I may look at Chevron or Royal Dutch Shell, right? Yes. You know, the entire thing, you know, I would agree, you know, looking into oil. Now I wouldn't get it. I mean, today was a hot day for oil. So give it a couple of days. I don't know, man. This invasion thing goes down. I don't know, but catch it on a down day. So right now, when you look across the market, the only thing that's really making money right now is energy and oil. Everything else, as an investor, you just got to stay still. If you're not going to put in new money, just stay still. Don't go in there and sell your Tesla. This is not the time to go sell your Tesla. This is not the time to go sell your Apple. Go sell your Microsoft. Don't go sell your Facebook, whatever you got in your portfolio. This is not the time to sell. If your portfolio is red, like most people's portfolios are red right now, if your portfolios are red right now, you just stay put. If you have more money, you add more money to it. If you don't have any money, you just sit back in. You just don't even log in, right? Because over time, it may take a year, it may take 2 years, but the bull, ladies and gentlemen, the bull, meaning going up, the bull will always win. What is something that Warren Buffett said? Warren Buffett said, never bet against America. Never bet against America. That's something that he said in the beginning of the pandemic. And this is a guy who's been around since World War II, right? So he's seen World War II, Vietnam, Korean conflict, this, that, me born, that person born, you know. He was here when we was on a gold standard. We got off the gold standard, housing booming crash. He says, never bet against America. And ladies and gentlemen, I will never bet against America as long as we got the strongest military. Shout out to the past, present, and future veterans out there in the world. Let's give a big loud round of applause to the veterans, because those are the backers of this U.S. economy. That's the real backing of the U.S. economy. Ladies and gentlemen, we're on a fiat currency. Our currency is backed by nothing but our word that we'll give you. It's our military. That's my personal belief. It's our military that keeps us, this whole economy booming. If we decided when we printed $2 trillion last year, we printed like $3 trillion in stimulus packages. Nobody was complaining when they was getting those tax credits for their kids. Nobody was complaining when they got the stimulus checks. Everybody loved it. But everybody know with every cause, there's an effect. With every yin, there's a yang. You go, you know, you push a button, something's going to happen. Something's got to give, right? So the yin to this was your inflation. If you just put $3 trillion into the economy and be like, oh my God, where's that inflation coming from? This is They go hand in hand, right? So guess what? We can print out $3 trillion. Who's going to tell us? Who's going to check us? Who's going to tell us no? We have the strongest military in the world. So nobody's going to check us. Nobody's going to tell us anything. If Banky Pound is still in here, he'll probably tell you, I'm not a street guy, anything, but on the streets, in order to make any rules, you must have muscle. And America has muscle. Now, the day that we no longer have the military or the strongest military, then I will become worried about our economy, right? So let's go here. Let's see what y'all got to say. Banky Pound said, let me see. Banky Pound said, I start with the best in the business, Mr. Prince himself. Salute, Banky Pound. Banky Pound, I appreciate that, man. I asked him, he said, hey, he was 20 years old. He went to prison. He got out at 53. And I said, where do you start financially? And I appreciate the shout out. We definitely going to sit down. We're definitely going to make it happen. Right? The opinion show said, let Peter Skiff tell it will be going to a depression. Man, Peter Skiff, this is the thing about it. Peter Skiff, shout out to Peter Skiff. Shout out to Peter Skiff. Shout out to him, right? He is a guy, he believes in doomsday. He's a doomsday guy. Bloom and doom. He like the world is doomed. He's been saying it for 20, 30 years. He's saying stack up on all the gold and you'll be rich and all of the good stuff like that, right? He's been saying it for, I don't know, God knows how long. But guess what? If you bet against something, if I go outside and I go and I say, hey, y'all, it's going to rain one day. It's going to rain one day. Eventually, I'm going to be right. Peter Skiff, he'll come out as the economy goes down. We go into a war and inflation and all this. We go into a recession. He's going to come out and be like, I told you guys, I've been preaching this for 30, 40 years. But yeah, you're right. Everybody know a bear market will come. Nobody knows when, right? So if you keep saying, hey, it's going to rain outside, it's going to rain, eventually one day you're going to be right. That's my only thing, right? He's been saying we've been in depression for 10 years. Shout out to him, though. He always says that. Carol says, preach. Okay, yeah, definitely. Thanks. Clarence M, I think that's my guy, CJ Dunk. What's going on, CJ Dunk? He said that's awesome. Clarence M, he says, my energy transfer partner shares are down. Energy transfer partner shares. I want energy transfer partner shares. I'm not familiar with them. I'm sorry, guy. I don't know everything. I know some people chase me down. Oh, you didn't know this. You should have known this. I'm sorry. I'm not a genius. I wish I was, though. She says, amen. Carol says, thank you for providing this wonderful advice. So many folks can benefit from this basic but truthful words of wisdom. Thank you there, Miss Carolyn. Headfield, where you checking in from? Appreciate it. Thank you. Appreciate you for checking in. She said, hoorah. Okay, there we go. Hoorah. Okay. Shout out to all the veterans out there making all these things happen. Julian, what's going on, Valimir Julian? He says Warren Buffett has been around since the Great Depression. That is true. He has been around. Wow. Yeah, he was kind of born. He was a Great Depression. That's a long time ago, y'all. That was 1929, 1930-ish. 1929, we had the market crash. We went into the depression in the 30s. And yes, he's been around since the 30s, the 40s, the 50s, the 60s, the 70s, the 80s, the 90s, the 2000s. Goodness gracious, right? Vietnam, Korean conflict, World War II, Pearl Harbor, all those type of things. He's been around for a long, long, long time. But Julian, thanks you, man. Thank you for checking me out. Appreciate that. That's my brother right there. Appreciate it, man. Max B said Uncle Sam printed money for stimulus. Now they have to pay it back. Hopefully inflation slows down. No, I don't think the Federal Reserve has a magic wand that's going to be like inflation. People act like the Federal Reserve is going to walk out of inflation. Stop. Inflation, stop. Slow down. It's nobody. I don't believe there's no magic wand that's just going to come out. We were at 7.5% according to the Consumer Price Index that came out a couple weeks ago for January. I believe in February we're going to move at another 0.5%. February we're going to go to 8. I think it's going to be a hot summer. I think we're going to hit double digits by the summertime with inflation. That's just my personal take. Now with this whole conflict that breaks off happens out overseas, Will that slow down inflation? Take a look. We'll see how things go. But the road we're on right now, this summer is going to be a hot summer for inflation, you know. So I definitely looking for that. You're saying, hopefully it slows down. It's not going to slow down on its own. The Federal Reserve is there for a reason. You got to think about it. The Federal Reserve saying that, hey, they want inflation at 2%. That's the Federal Reserve's goal, 2%. And here we are at 7.5%. And we got to this 7.5%. We've been moving up by 0.5 every year. The highest inflation that I've seen that's being recorded was 1982, I think, if I'm not mistaken. No, I'm pretty sure it was higher during the Great Depression. But the last time inflation was as high was 1980 when we went up to about 14%. So, yeah. And guess what? Oil did very well at that time, too. So oil definitely did very well. So we'll see. We'll see what the Federal Reserve is going to do, how aggressive they're going to be. Banking Pound said, in life, the strong handle the weak, but in turn, the smart handles the strong. Strength, knowledge. Knowledge is king. Ooh, that's a gem. So listen to what he said. He said, in life, the strong handles the weak. Physical. Speaking physically, the strong person goes out and says, hey, I'm going to put my hands on you because I'm bigger and stronger. But then he says, but in turn, the smart handle the strong. Everybody knows with the current way that the military is set up, the next war that breaks out, it's going to be digital. It's going to be the fight of the minds, right? It's not going to be the fight of, hey, look at me, I'm bigger and stronger than you. It's going to be the fight of the minds. People are going to be on computers in a laptop declaring war on other countries, right? Welcome to the 21st century. That's how we fight now. The smart guy. Just because you're bigger and stronger and you're a gladiator, don't think you're just going to go beat up everybody and be Debo around the world because you're physically strong. Why does America have the strongest military? Not because we walking around here with the biggest, toughest, baddest son of a guns in the military physically. It's because they got some of the brightest minds in the military and civilians too. We do have contractors too that help out. Some of the brightest scientists and some of the brightest engineers and the brightest service members and operators that know how to operate certain things to make us the strongest, most advanced military, right? You don't see, when you look at the people that go off into the military now, it's not guerrilla warfare. You're still going to have your special forces forever, but you're not going to have that guerrilla warfare as much anymore because people are using their brains now. You're seeing cyber, you're seeing IT. People have all type of technology, IT, cyber, and all type of capabilities that I'm not going to speak on. But it's a lot of things out there, but you're right. He's saying that, hey, strong, you think you're going to go in and be physically strong, but hey, it's the smart that handle the strong. Strength is knowledge, what you know, how much you know, and who you know. Your resources and your brain is way stronger than any muscle that you can build. I like that. I like that, Bank. I like that. What's going on, Julian? He said, Vlad says, what's good? Cause I miss you. He said, retiring, keeping you at my hip. Money's coming in torrents soon. Okay, torrents. Okay. All right. Appreciate it, man. Appreciate it. Definitely. Definitely stay in contact. Clarence M says, great show, Prince. Always some good wisdom. Appreciate it, man. Appreciate it. So as we look at this, ladies and gentlemen, as we move around this world, as we see the world, the tension draws. One thing that I would tell you, this lesson that I learned, and somebody just hit on this earlier. I was interning shout out to, it was a wealth management company. I interned, it was in Austin, Texas. Brian Winterow, shout out to him and his lovely wife that allowed me to intern at his firm probably about 5 years ago now. And at that time, I probably was like 33 years old. And he said, hey, you could leave the military. You could come to this firm if you want to. 5 or 6 years ago, I think this was. And he said, and I said, man, this would be a great opportunity. Man, I love everything about this firm and everything like that. And he said, you can finish your military time. And I said, man, if I finish my military time, I'll be like 37, 38 years old, man. I'll be old. I want to do this while I'm young. And he taught me, he said, in the financial industry, people don't like, nor do they trust young people. I said, what? He said, hey, It's just a fact. People like to see people with a little wisdom. They like to see you with a little gray in your beard. They want to see you with a little gray on the side of your head, right? I said, why is that? The young guy could be just as smart, seen as much, and everything else. He said, hey, some things time has to teach you. See, as you get older, you become married. You might become divorced. You become a father. You become a mother, an auntie, an uncle. You see things in life. You get to learn. You get to see things in life, and also most importantly, you get to see things repeat itself. So you take me for example. One of my scariest moments, I know, like they say, nothing is new up under the sun. So I have to always keep older people next to me because the things that I worry about today, the things that I never seen today, my older mentors laugh at me and say, man, come on, that already happened. You know what I mean? That's already happened. You can go back to this, right? We've seen this. So it's a lot of wisdom, right? You can go off and get all the education that you want to have and stuff like that. But people like to see wisdom. Because guess what? Some people, it's easy to catch a hot hand. Who remembers Kathy Woods? Kathy Woods, shout out to Kathy Woods. Kathy Woods she owns ARK Investments. She's the investing manager for ARK Investments, right? And you look at what she did. ARK Investments was like one of the hottest ETFs 2-3 years ago. Nobody could top them. I mean, they were bad. Everybody loved them, right? And the thing was, now the last 2 years, ARK has been complete trash. They did very good when technology was doing well. Then when technology stopped doing so well, guess what? ARK Investments she doesn't have the hot hand so much. So what happens is when you're young, a lot of times you get the hot hand. I mean, everybody's done it. Everybody's done it in option trading. Every aspect of life, somebody has been young, figured something out. But over time, market shifts, things change, and you may not know how to react, right? Man, I did everything right, but it didn't work out that way. Wisdom. Wisdom is the key. Let me see what Clarence M says. Young guy, Wall Street Bets. I think I remember Wall Street Bets. I think that's the one on Reddit, right? Is that the group on Reddit? Everybody, I don't know what happened to all the AMC people. I mean, a lot of people came in when whole AMC and GameStop. Remember the big shorts? Everybody was shorting GameStop and the squeeze. Everybody was waiting on the squeeze of AMC and the squeeze of GameStop. And then, everybody was arguing. Everybody was kind of arguing me about, hey man, movie theaters, they're the best thing in the world. I wasn't crazy on it. I never really got into the catch of it. I watched it, but I never got into that craze of this big. The thing about what I remember a lot of people did on Wall Street Bets were those squeezes everybody was trying to do, go up against Wall Street, break the Wall Street people with GameStop and break the Wall Street people with AMC. Maybe they had a good time at it, maybe they didn't, but you're playing in a rigged game. This is a regulated market, right? Now, if you was in crypto where it's unregulated for the most part or unregulated market or whatever, but you're in a regulated market where they can just freeze your account, take the money out your account and say, nope, you was wrong. You can't have this money. Put it over somewhere else. That's the fine print when you open up a brokerage account. You got to play by the rules. And if they suspect if they suspect that something crazy has happened, then they can just stop you from playing. They can freeze the entire market. Do y'all remember in 2020? Every time the market dropped, I think 7% consecutively, they can just stop the market. They have interlocks on the market. Tell everybody, all right, stop, get out of here. Take 15 minutes, come back on. And if it continues to happen, they can just shut the market down for the day. So there is a governing body. Why do we have a governing body? When did the SEC get formed? After the Great Depression. Why did we have a Great Depression? Because in the rolling 20s, in the early 1900s, people just went crazy. A lot of backwoods stuff kind of still is going on, but now they had to create the police. So now they got the police involved. The SEC is there to make sure, or to at least try to catch day trade, people who are doing insider trading, all those type of good things. What's going on? Max B says, what a way to wrap up King. Appreciate it, man. Appreciate it. Appreciate that, Max B. Yeah, the Opinion Sports Show. He said the AMC people got ran out, either sold or took big losses. AMC isn't worth the price it traded at, even right now. Now, people came on now when AMC was hot and people were becoming millionaires and doing all type of things and doing the Prince, the next squeeze is coming and I'm going to squeeze. I don't like to get involved in none of that stuff, man. I'm not that smart. I know this is a regulated game. Right? You're on the internet. People are watching you. People can see you. You don't think that when you open up your brokerage account and you put money in there, once you sell something, you just can't. That money has to settle. They get 3 to 4 days to look at the money to see if it was right. And if they think a stock is being manipulated, they can just delist the stock. Just take it off. Like, oh, there's too much funny business going on. Delist it. And then get all the people who brought it and was doing manipulative things to it and bring them up on charges, freeze their account, take the money. Come on, man. You're in a regulated game. So anybody's like, yeah, we're going to get back at Wall Street and we're going to do this. I didn't subscribe to that. I didn't like that. That's just not me. Yeah, the circuit breakers hit. I remember. Yeah, you remember we went live on Wall Street when 2020, when the pandemic was hitting hard and markets was falling. Uncle James was right there on Wall Street, live on Wall Street. He went live on Wall Street telling me when those circuit breakers got hit, those chicken switches got hit. I want to say, I think it's every 7, if it drops 7% in one day, this is the stock market. Because you got to think about it. Stocks go up slow, but they fall fast. They go up slow, they fall fast. So to stop everything from falling, like crazy, they stop everybody. Because when you see big sell-offs like that, people are scared. Some type of fear has hit in. A pandemic has came along, something like that. Edwin says, this may sound like a dumb question, but why isn't technology doing good right now? Not a dumb question, man. I would say right now, technology is not doing as well because technology is a growth company. Technology stocks don't trade off of their value today. They trade off of future value, future PE, price earnings. So they're a growth stock. So this is why you can see small tech companies, people not looking at their small tech companies at the day, they're looking at their growth for the future. So meaning that a lot of times people consider them to be overvalued or overpriced, not overvalued, but overpriced. So you're looking at 2020 when we had the rebound out of the pandemic. You saw tech stocks go up. 2021, you saw a pretty good year for tech stocks. Now that they know that interest rates are about to start to rise, and they also know the Federal Reserve is tapering, pulling money out of the market. So when the Federal Reserve, when the market starts to go down, the ones that go down the fastest are the ones that went up the fastest. So a lot of people, to cushion themselves, they're taking their profits. They're like, hey, Tesla, ooh, it was fun. Let me secure my profits. Hey, it was fun. So they know that technology has the most volatility. The ones that go up the fastest are usually the one that goes down the fastest too. So that's technology. When you look at across the market, when you look at the Dow Jones, the S&P 500, the NASDAQ, when you compare that NASDAQ against the S&P 500, you're going to see over the last 5-10 years, the NASDAQ probably beat the S&P 500. But if you look at that standard deviation, that volatility, I guarantee you the NASDAQ, who carries majority of the technology stocks, had the most the higher deviating rate of volatility that happened. So for right now, people know that, hey, technology stocks are the ones that went up the highest. They're the ones that's probably going to get hit the hardest when the market starts to take a downturn. So some people are taking their profits, protecting themselves. He said, thanks for the info. No problem. All right, it's going to be the last one before I roll up out of here. He said, get back at Wall Street. He said, get back at Wall Street. Man, those Wall Street hedge funds will set a trap for the retail investor if they keep trying to flush out the hedge funds. Yeah. He said, get back. he's looking at like, hey, these people want to get back at Wall Street by squeezing them out. I'm like, these people can go down the street and just borrow an infinite amount of money and get back into the game. Then tell the SEC that you stole their money. This is a regulated game, ladies and gentlemen. It's very regulated. So to come in thinking you're going to do something crazy, go ask Bernie Madoff, go ask the Wolf of Wall Street, Jordan Belfort. Eventually, you're going to get caught. People get caught every day. But the reason why we have all this, because this is nothing new up under the sun. People have been doing this. If you read the book, The Greatest Stock Trader Ever, Jesse Livermore, his book tells you back in the 1800s, all these things we think that we're inventing today, they was doing this way back in the 1800s. They had stock pools. They had people squeezing other people out. All that stuff was going on back then. That was before the Security and Exchange Commission was created in the 40s as a result of the Great Depression. Nothing new up under the sun. But ladies and gentlemen, I thank y'all for tuning in. I love talking to y'all. Y'all remember stocks down, oil is up, Russia and Ukraine tension. We're going to see what happens. With inflation going up, what is the Federal Reserve going to do? But I got to get out of here. I got to get running. I got to help my son with his homework before it gets too late. And I got to make some phone calls. But I definitely thank y'all for checking in. Y'all make sure y'all hit that like button. It's saying we got about 20-something people in here live right now. So I should have 20-something likes as soon as I get out of here. But I definitely appreciate y'all. Appreciate the conversation. And we're going to stay tuned. Don't forget, the bull will win. The bull will always win. And to never bet against America. All right. Happy investing. And to the next video podcast, or whatever else crazy y'all see me doing across the world. Peace. Be safe. I'm out. And thank you.